Have you ever felt like you're working harder but getting less? Like your money doesn't go as far as it used to? You're not alone, and it's not your imagination. There's a hidden thief that's been stealing your time and wealth, and today, we're going to expose it. This thief goes by the name of fiat money. But what exactly is fiat money? And how does it steal from you? Stick around, because by the end of this video, you'll understand not only how this system works, but also how to protect yourself from its effects. Let's start with a simple question. What is money? You might think it's those bills in your wallet or the numbers in your bank account, but here's the twist. The money we use today isn't backed by anything tangible. It's called fiat money, which means it has value simply because the government says it does. You see, money hasn't always been like this. We've gone from bartering goods to using precious metals to paper money backed by gold, and finally to our current system of fiat currency. Each step removed us further from real, tangible value. But here's where it gets interesting, and more than a bit scary. Unlike gold or other commodities, fiat money can be created out of thin air. Central banks and governments can print as much as they want. Sounds great, right? Free money for everyone. But there's a catch, and it's a big one. Every time new money is created, it dilutes the value of the money already in circulation. This is called inflation. It's like adding water to a soup. You get more soup, but it's less flavorful. In the same way, your money buys less and less over time. Now, brace yourself for a shocking fact. Since 2020, the US dollar money supply has increased by about 40%. That's right. In just a few years, nearly half of all US dollars in existence were created out of thin air. It's like suddenly there are 40% more slices in the economic pie, but your slice hasn't grown. In real terms, your piece of the pie has gotten smaller. This massive increase in money supply leads to rising prices across the board. While prices go up due to inflation, your salary often doesn't keep pace. But it's not just your paycheck that's affected. The money you've diligently saved in your bank account is also losing value. This means that over time, both your hard-earned income and your carefully saved nest egg buy less and less. In essence, the system is stealing your purchasing power, and with it, the time you spent working to earn and save that money. Think about it this way. If it took you an hour to earn enough to buy a loaf of bread in 2020, it might now take you an hour and a half to buy the same loaf. That's half an hour of your life essentially stolen from you. And those savings you've been counting on for the future, they're silently shrinking in real terms, even as the numbers in your account stay the same or grow slowly. But don't lose hope. The rich have learned how to turn this system to their advantage, and you can as well. Wealthy individuals invest their money in assets rather than holding on to cash. When the money supply grows, asset prices climb because there's more money competing for the same assets. This causes the rich to become even richer as their assets grow in value. Furthermore, new money frequently flows into businesses and investments owned by the wealthy, boosting their wealth even more. By investing in assets, you too can protect and grow your wealth. Educate yourself about finance and economics. Knowledge is the first line of defense against the devaluation of your money. By understanding how different financial instruments work and the dynamics of the economy, you can make informed decisions about where to allocate your resources. Diversify your savings into assets that tend to hold value over time. Diversification is key. Let's explore some asset classes known for their ability to preserve value. Stocks, ETFs. Historically, the stock market has provided returns that outpace inflation. For instance, the S&P 500 has an average annual return of about 10% before inflation over the past century. By investing in a diversified portfolio of stocks or exchange-traded funds, ETFs, you can benefit from the growth of the economy and protect your wealth against the eroding effects of inflation. Gold. Gold has been a store of value for thousands of years. It often retains its purchasing power over long periods, especially during times of high inflation. The average annual return on gold over the last 50 years has been around 7.8%. As fiat currencies lose value, gold tends to rise, making it a reliable hedge against inflation. Bitcoin. Bitcoin, often referred to as digital gold, has gained popularity as an inflation hedge due to its fixed supply of 21 million coins. Unlike fiat money, Bitcoin cannot be inflated by central banks. Although relatively new and more volatile, Bitcoin has shown significant appreciation since its inception. with annualized returns exceeding 200% in its early years. Bitcoin offers unique advantages such as decentralization, censorship resistance, and security through blockchain technology. It also facilitates cross-border transactions without intermediaries, proving especially useful during crises. Real estate. Real estate investments, including owning rental properties or REITs, real estate investment trusts, can provide a hedge against inflation. Property values and rental income tend to increase with inflation, maintaining their purchasing power. Historically, real estate has provided average annual returns of 8 to 12%, making it a solid choice for long-term investment. Consider investing in commodities or other inflation-resistant assets. Commodities like oil, agricultural products, and industrial metals can also serve as protection against inflation. As the prices of these goods rise with inflation, the value of investments in commodities can increase, offsetting the loss of purchasing power in fiat currency. By holding a diversified portfolio that includes stocks, gold, Bitcoin, and real estate, you can protect and potentially grow your wealth even as more money enters the economy. Each of these assets has historically provided returns that outpace inflation, ensuring that your purchasing power is preserved or enhanced over time. Remember, knowledge is power. By understanding how the fiat money system works and the real-world impacts of monetary policy, you've taken the first step towards protecting your time and wealth. So, what do you think? Have you ever considered how the massive increase in money supply might be affecting not just your paycheck, but also your savings? Share your thoughts in the comments below, and don't forget to subscribe for more content about the financial world around us.